Reactions have continued to trail the latest figures released on the rise in unemployment in the UK. This comes as the UK's unemployment rate ticked up to 3.8% in the 3 months to February, according to official figures that also highlighted a faster than expected spike in wage rises. The Office for National Statistics said the jobless rate rose from 3.7% due to a surge in the number of people unemployed for more than 6 months. The rate rose despite part-time employees and self-employed workers driving an increase in the employment rate. The data also revealed that vacancies fell by another 47,000 to 1.1 million in 3 months to March, with total pay, including bonuses, growing at an annual rate of 5.9% in the 3 months to February. Joining me now to speak on this is global affairs analyst and financial analyst as well, Benga Nifade. Thank you for joining us. He joins us virtually from the UK.
Good afternoon.
Good afternoon. We've seen that the growth in the UK, and according to the figures, by the ONS, seems to be flatlining. Why is that?
Yeah, mainly it's due to the core inflation, which has actually been rising, and it's not coming down, as fast as as compared to the other G7 nations. If you look at America, if you look at Japan, and other. And it's the whole thing was trying to be nipped. One of the key things was the fact that it was actually cautioned that the Central Bank of England, they did not raise interest rates early, according to to when they should have raised it. So inflation had to get to kind of a record level before it was being targeted, and as a result of that, all this is now cascaded, and of course, if people are actually feeling the pinch in their pockets because, you get a pay rise, but at the same time, inflation is higher than you get, than the amount that you got paid, which, in a way, it just feels like scoring an own goal, and you're not exactly, seeing the benefits of why you're working, unfortunately.
We're also seeing a wave of public sector strikes in the UK. Will the growth story be different without the strikes?
Oh no, absolutely not. I don't see any difference at all in that happening. If there hadn't been strikes of some sort, it wouldn't affect it either way anyway, because when due to COVID, I think a lot of people were home. There's been a lot of money printed out, which was labeled as quantitative easing, really. So as a result of that, there's been so much deficit in the government's coffers, and now they need to feed this back. But now people have been forced to go back to work. But at the same time, even if you're going to get a pay rise, but the cost of living, what should I say, is the salary is not coming up as fast as the inflation. So you expected saying certain percentage in pay rise, but at the same time things are actually going up faster than you can afford. But the other thing is, these shops who are experiencing this this counter effect as well, in the sense that the global market, things are quite expensive, so these shops are passing on this cut to the employees, or to the buyers, really, shoppers of the market, and as a result of that, people are feeling the pinch, and people thought, do you know what, it's not actually worth them working, or they will rather stay on the picket line and demand for more pay rise. And at the same time also, even though we know to an extent this is a global phenomenon, but the key point is the fact that other countries are battling it better than the UK, and at the same time, I think the pound has actually gone a lot weaker. I think it reaching record low in last year. So pound is cheaper, which means it's quite expensive to make purchase from the UK. And just about a month ago, we had a lingering fear of recession being eased, but now again it's actually really coming back all over again. And it's been, I think UK has actually been picked as one of the biggest, one of the key major economies to have a recession in terms of probability.
And just because you mentioned recession, the UK Chancellor Jeremy Hunt did mention that, look, the UK is heading towards growth and not recession. He mentioned that in Washington while he was attending the IMF meeting. Do you share that optimism that right now the UK is heading towards growth and not recession?
No, I mean, not absolutely not at all. All key indicators do point to the fact that no, it's not happening. And I think this is actually the first time this year that inflation has actually come down. We had a surprise rise, surprise jump in February. Even though when we expected inflation to drop, and so again for March it dropped a little bit, but food prices have actually risen back to, the highest rates of 1977. And in fact, one of the data that came out today, the food price, he rose, at the fastest pace over the past 12 months. So even though I think the key lingering thought is that we might have one, it might be very weak, but at the same time, I think the key thing that the key factor that Jeremy Hunt is working towards is halving inflation, which he said he plans to do, if it's going to shave 5% off inflation by the end of the year. We're almost at the middle of the year. Inflation is still, at record high. And of course, the key indicators does actually point to that recession is on the line. It might be a weak one, but it definitely, but when it's talking about growth, it's actually very flat line. We're not seeing growth at all this year.
Let's look at some factors specific to the UK that some financial analysts like yourself have also said, look, might be contributing to the decrease in growth in UK. One of them is the fact that, look, although they have said in the UK, in the G7, the UK has the lowest corporation tax, but the UK did increase its corporation tax from 19% to 20%. But some have said, look, the taxation, UK is overtaxed and overregulated. That might be contributing. We also know that there are about 1.1 million jobs, vacancies unfilled. And some say it's because the labor market is broken, again, because of taxation. I want to get your reaction to that. And then where do you suggest that, look, if this is going to be dealt with, what do you suggest that those in authority start from?
Again, so number one, you got to look at different factors. Let's just pick it up from, let's look at the housing sector for a minute, for example. I think a bulk of wages are, and it's, greater than 50% of wages are going towards bills and tax. That's number one. So as a result of that, people are thinking, do you know what, is it worth me doing this work? And sometimes when inflation comes down, as a result of jobs factors, it's as a result of people taking 2, 3, 4 multiple jobs. So people are council tax, which is like a tax you pay on your rent or the mortgage, that's actually going up. Services are being decreased because the government they cannot afford to keep up the same level of service. So that is number one. So people are feeling more pinch in their pockets. That's number one. Number two is the fact that prices are rising. And again, let's not forget that last year, well, a few years ago rather, UK left the EU. So Brexit is one of the key contributing factors as well. And UK hasn't actually got the key, the key labor, how should I call it? The key cheap labor, in quotes, cheap labor. Who's going to fill this? Who's going to fill this gap? I think one of the things or people are talking about generally and pressurizing the government or the lobbyists, I will say, are pressurizing the government is to take this take this bull by the horn, and you've got to treat this with, serious emergency. Again, energy prices have been rising at record rates also. So, the government tried to subsidize this, but if you think about it, if you subsidize some of these energy prices or energy costs, where is the money coming from? And regardless, where is the money coming from? It's, you give it one hand, you take it back on the other hand, because it's still back, you're being taxed all over again. It's coming back to the government. Another thing is rising transport costs. So if energy is rising, of course, transportation costs is going to rise. And then, of course, we've got to look at the bad weather. The weather's been, weather hasn't actually been great also, which has triggered, low harvest. And I kind of forget where the question is coming from, where the key question was now. But all these are contributory factors. Again, what could the government do? Talking about corporation tax. Yeah, corporation tax, it was deemed not to be one of the highest, but it's actually been raised to 25%. And when it's to 25%, what will the corporations do? The key corporations, they will pass this back on to to shoppers and the retail and people who are buying. So in a way, you've got to understand. And while protests are going on, for people are demanding more money to be paid, so the money is going to be taken from the government coffers, and the government's going to have to overtax or heavily tax them all over again. So in a way, it's a very difficult. You're stuck between a
basically, it sounds like an irreversible reaction. One can't go without
absolutely.
it,
You're stuck in a rock and a hard place. Correct. Yes.
All right.
Correct.
Thank you so
yes.
much
So
always
I
for
think
breaking
one of the key
these
things
things. Thank you for always breaking these things down for us. I'm global affairs and financial analyst Benga Onifade.
Thank you for having me. Thank you.